Hello and welcome to Closing Trades, right 10:80 now. With me, Aisha Faridi, Vinny Motiwala as well, joining in with me in the studios right now. And we're holding put to that global cheer. And we're still above 170 points up in the green, holding on to that 22k mark. Sure enough, we did have some jagged edges throughout the day, but largely we managed to stay put with the gains. What's contributing to today's moves? OMCs have definitely made a comeback. Metals continue their uptick as well. Some of the banking names are participating in today's move. So cases in point being BPCL, which is up 3.5%. There's Coal India, Tata Steel, which is looking very strong. IndusInd Bank is up nearly 3% in trade. There's Tata Motors, there's Hindalco, which is holding out very well. JSW Steel is looking good. L&T is participating in today's move. The Adani names as well looking quite okay. SBI, ITC, Bajaj Finance after that upgrade coming in from the House of Bank of America, and HDFC Bank as well, which is higher by about 1%. So not a concern really. In the meantime, of course, there is that lag part of the market as well. There are always some losers. So Bharti, Petronet, Maruti are seeing some profit taking perhaps. But that said, Vinny, what's happening with the broader end of the market?
So absolutely, when you're looking at the broader end of the market, also not bad, right? In terms of the move that we saw coming in the last couple of days. As of now, look at the Nifty Midcap, managing to do better than the benchmark indices. Even the small cap side is doing much better than the benchmark indices. Gains of 2% is what we're seeing. Day's highest point is where the Nifty Mid and Small Cap both are trading at as of now as well. You know, what's interesting is all these PSEs, public sector companies, that is something that's holding on to strong gains. So whether you look at a PFC, REC, BHEL, SAIL, HAL, Defense Pack 2 again are seeing a bit of attraction, Concord, LIC, all those are holding on to very, very strong gains. And obviously we have, in terms of other than that, the movers that one could watch out for. In the mid and small cap side also, some of the names that we see buzzing are also L&T Technology Services in the mid cap, Indian Bank, CG Power, POLCAP, Nika, that's the one that is buzzing away in trade as well. So that's how the mid and small cap is also looking like. Quite chopped up in trade today, at least as of now. We'll see in the next 1 hour also what happens, but surely seems like the momentum is there at least for the mid and small cap. But let's also bring on board Siddharth Kemka, Kunal Bothra, as well as Naresh Mirani. Very good afternoon, gentlemen. Thank you so much for joining in with us. And Siddharth, let me take it across to you first. You know, what we're seeing is a bit of a chirpiness coming in, at least for the mid and small cap today. We're seeing a good move compared to the benchmark indices. You know, do you think, again, we could see that outperformance now come in for the mid and small cap, or this is just one of the signs that is coming in for the mid and small cap?
I think there was a good correction that we saw in the mid and small caps in the last couple of weeks. And there were definitely a lot of concerns from the regulatory side, right from SEBI talking about the froth being in the mid and small caps, the mutual funds reporting the time to liquidate 25 and 50% of the stocks. And definitely there was a cautious view. Markets were sitting at all-time high, and we saw good profit booking across the board. After that, having said that, valuations for mid caps definitely have not come in the comfort zone. They are high. But the correction of 10-15% in the index, about 8 to 10% index, and 15-20% in several stocks, mid-cap stocks, that kind of, I think, gives a good entry opportunity. Given the global backdrop, the big event is now through, which is the Fed meet, and the outcome, the commentary definitely calmed a lot of nerves globally that there would be 3 rate cuts this year, while the market was started factoring in whether there could be 3 or there could be 2. And a direct impact that we could see was because of the lesser liquidity flows towards emerging markets could have been the mid and small caps. So I think, yes, definitely there is an opportunity in the mid and small caps, but you cannot rule out volatility. Large caps are much better placed in terms of valuation comfort, in terms of growth visibility, and the ongoing or the upcoming events, including the elections, which could again add to some volatility in the market.
Well, with the US Fed out of the way, you've also, of course, got Japan, which was the first to actually increase interest rates, but that economy is in a different trajectory altogether. By the way, the Japanese Nikkei has hit a fresh record high. Once again, Asia stocks have been holding up very well, especially after the leg up that you had from US equity markets as a handover. Switzerland, by the way, has become the first major economy to actually cut interest rates in a very surprise move. The markets weren't anticipating that. So you've got the European markets holding out very, very smartly as well in trade. In the meantime, you've got the ECB, or rather the Bank of England, wherein the meeting for the central bank is actually impending, and there is anticipation that they're going to hold rates much like the Fed as well. But Kunal, what does today's bounce mean? Does it really make us forget, or should we forget all that's happened in the last 2 weeks?
Yeah, at least for some part it should make us forget. But I think the data point is quite dramatic when you look at India VIX, because for the first time in 2 years, the India VIX is falling not just below the 13 levels, but it's also now on the verge of breaking below its 200-day moving average. Now, why is this significant? Because this gets us back towards the earliest or the recent data point was in 2022, July 2022, when the Nifty was going through a similar 3-month, 4-month correction at that point of time, and the index was sub 16,000 levels. With the India VIX breaking below that 200-day moving average, we saw the index in the next couple of days forming a major bottom, and then from there on till the period of the next 5 months post that, we saw the index rising up by almost 15 to 20%. So from 16,000 at that point of time, we managed to rise till 19,000 plus levels for the index. So I think that's a very big change of data point which is happening for our markets this time around, with the India VIX back again on the verge of breaking below its 200 DMA.
As a trend, other than India VIX and the kind of significant cool-off that we've seen to the tune of about 7.25%, just wanted to understand sectorally as a trend, you think metals is where the strength is? Because even in today's bounce, it's actually metals which is leading the move.
So metals is a spot of strength, and like I've been discussing for some time, that copper has given a breakout above the $4 mark. Then if we look at global indices, also the Dow Jones Metal and Mining Index has hit a new all-time high. So 2022 highs have been crossed there. In the same way, a lot of metal stocks, after peaking out in 2021, the sector and the stocks went sideways. So if you were to look at a Tata Steel, it topped out around 150, 160. And now it is coming back to the same prices almost after 2.5 years. Same is the case with the SAIL, which was at 150 back in 2021. Came back to those levels a few weeks back and is again testing the same trend going forward. If you look at a Vedanta, adjusted for dividend, all-time highs would be around 285, 290. So a lot of these names are structurally setting up for an eventual breakout going forward. So metal as a sector globally looks interesting. The base metal commodities also look interesting. And if you look at it, even silver is breaking out. Gold is.
Yeah, I think we snapped the line with Naresh, but gold, Aisha, surely that's the one, it's reached new high levels. And, in that range now today, we've seen Muthoot Finance, Manappuram Finance, that gold financiers actually seeing a run up, not because of that, but gold prices surely are on a high level. And that's one to keep an eye out on also. It's a safe haven, but I don't think there's much of an issue. But today is surely seeing a run up on.
It's an unusual time, right, Kunal? Because you do map the charts of gold, their equities, Bitcoin and gold, all of them are holding up.
Well, yeah, absolutely. So I think, I think except for that last 1 month of our market correction, if you look at across the globe, everything was cool and calm. I think, the US markets, even going to that Fed policy where we were more jittery, the Indian markets, but the US markets were absolutely calm. Then we we got into a breakout. The Bitcoin, I think, as an asset class has also done exceptionally well in the last 1 year. Gold, I think in the last 3 weeks also has been, in the rupee terms, still at 65, 66,000. So that itself indicates that there was a lot more calm outside in different asset classes as compared to our markets.
Right, Kunal, but with those gold companies, would you look at any of these gold financiers, right? Is it time to start looking at them or something? Because today we are seeing Manappuram, Muthoot both passing away in trade.
So Muthoot could be a better trade at this point of time. Manappuram is extremely high beta, so I'll probably try and avoid that as of now, because the markets are still trying to find its feet in terms of the key support points. So I think Muthoot could be a better trade at current levels. The stock is up some 4-5% so far. It's crossed about that 1400 levels, but more importantly, it's on the verge of more of a cup and handle kind of a breakout on the daily chart. So about this 1400 levels, I think Muthoot Finance is something which could probably provide another 80 to 100 points up move.
Well, we are back with the latest edition of Times Now Summit. Over the years, Times Now Summit has been championing the pertinent national agenda points where India's leadership, leading thinkers and national influencers all come together to define the action plan for India's progress. Themed India Unstoppable this year, we're going to be focusing on charting India's remarkable journey and its increasing influence on the global stage. So join us on 27th and 28th of March in New Delhi and watch the who's who of the political corridor share their views. To stay with us for all the highlights and all the action as the action begins right here on the Times Network.
Welcome back. You're watching Closing Trades on ET now. As of now, Nifty managing to hold on to those 22,000 levels. Broader markets continuing to do better than the benchmark indices. But Siddharth, I just want to come to you and talk to you about overall when you talk about the metals pack. What's the view in terms of Nifty Metal, all these metal companies, when you look at any of that? Anything attractive looking in the basket, or maybe it's time to just wait and watch for this?
There is some merit in looking at metals. You have seen a super cycle in the previous financial year, and from there we saw how the margins kind of compressed. But again, now we are talking at we are looking at a scenario where China is looking at putting some stimulus to grow its economy. They are targeting a higher economic growth. Globally too, we are seeing strong economic growth, be it US, be it Japan, be it India. Indian economic growth has been pretty strong, and a lot of these metal companies, what the results we saw was largely driven by the domestic market. So we expect the domestic market to continue to lead in terms of demand, plus recovery in some of the global markets that is leading to higher commodity prices. That is also kind of supporting the overall metal packs. So within the pack, if you look at Hindalco is something that is present in the aluminium as well as copper. That is something that we believe could do well from the non-ferrous side. And within the ferrous side, we like Tata Steel, Jindal Steel. We believe both of them could continue to do well in the near term.
Right, okay, that's the take coming in on some of the metal names. Just taking stock of what else is holding out today. And two of the power financiers have had quite a big move today. So REC, PFC, both of them in tandem have held out very smartly. It's a solid over 6.5% move that you're seeing on REC alone. PFC on the futures as well is up nearly about 6.5%. Naresh, just wanted your sense in, considering, power seems to be the sector right now. These two financiers, because they too have seen a fair bout of correction actually take place. Now, what's the call on REC PFC?
So the view is, after such a correction, we do not get a V-shaped recovery. So from a high of 470, 480, the stock went down all the way to 360 PFC. So that's a decent enough correction. So now it should get into a range-bound move. Short-term bottom is done at around 350, 360. Going forward, 420, 430 would be a stiff resistance. So that would be a tough resistance area. We are still far away from it, but not the time to be actually buying into them as of now. One could be better off looking at other sectors related in power, wherein a power grid could be interesting compared to a PFC. So overall, the view is they'll go sideways, PFC and REC, for next few months.
Absolutely. Surely keeping an eye on that, and keeping it with the PSUs. Siddharth, I do want your view in terms of overall the PSU baskets, right? First, we did see those defense players run up. Now we are seeing the power names running up as well. In the defense pack, is there any still value left? Can you play any of these PSU names specifically? Not only defense, but anything there is value in the PSU side?
Definitely, I think there is a lot of value in some of the PSU names. Some of the sub-segments have run up ahead of the fundamentals, and that is why some consolidation and profit booking. But if you look at the larger space, oil and gas is another space where we believe that a lot of value is still left. So two stocks particularly that we like in the space, GAIL India. GAIL is entailing a 4.3 TBD green hydrogen project, which we believe will go on to meet its long-term objective of 20% hydrogen blending in natural gas. That is a big change that we saw in some of the other power stocks where they consciously moved towards the renewable and green energy from the fossil fuel. So, and that led to a lot of re-rating, be it Tata Power, be it other power stocks. So I think that kind of story will play out in GAIL, where they are now getting into this green hydrogen project. And on the core business also, we believe that the core business would continue to grow well. We are expecting a 14% EBITDA CAGR, driven by rising natural gas transmission, improvement in the petchem segment, and we believe a one-year target of 215 is quite possible. The other stock is Oil India. We believe that again, then some of the newer oil drilling projects that they are getting in the Andaman Nicobar Islands, that will increase capacity. In the near term, the commissioning of the additional capacities in Numaligarh refinery by September 25, which could add to another 45 billion rupees of PAT run rate to current 20 billion per annum in FY24. So that's a huge jump with the newer capacity that can come. So again, another oil and gas, so one in the oil space, upstream oil company, and the other in the gas space. I think these two PSUs could do really well in the next 1 year.
Okay. Oil India, GAIL, that's the word coming in from Siddharth. But we also managed to speak to some of these other market voices. We spoke to Nilesh Shah from Envision Capital as well as Harish Krishnan in terms of the PSU baskets as well. What do they think in terms of the PSU play? What are they liking? Listen in.
But I clearly believe that PSUs are in for some kind of a more long-term re-rating. They have kind of re-rated meaningfully. It's quite possible that over the course of next maybe couple of months or so, if there's further correction, I clearly believe that even in the large cap space, the PSUs do offer a great opportunity. And post the elections, if a fresh bout of reforms come in specifically directed at driving more efficiency among the PSUs, clearly believe that's going to be a great opportunity. I believe private banks again are poised for some good growth. And third is the entire auto pack. The auto pack is automobile pack is essentially still well poised. They seem to be headed for some strong growth over the medium to long term. From that, Reliance, I think Reliance again continues to be a good place to be in. I think it's in the right verticals across energy, retail, digital, and that continues to be a very, very interesting play going forward. And we own it as well.
PSUs have clearly, come back into life in the last 2-3 years, and it has also been led by the greater theme of value doing exceedingly well. So I think it's important to understand, that it's part of a bigger move rather than just looking at it in isolation. So now. Value in our understanding does exceedingly well when economic activity goes up significantly, and that was the case in the last 3 years, wherein from a complete stop of economic activity during COVID, we've come back very, very strongly in terms of the delta in economic activity. So the first derivative of growth has been very, very strong, and that impulse typically tends to benefit value a lot more. We do think that that big move that we saw was more a culmination of the value trade, and we think that over the course of the next 18-24 months, we would get back into the more sedate growth and quality at a reasonable price kind of a style, and therefore we are now very selective in terms of our PSU view.
Right, okay, that's the take coming in from for some of the PSU pack and what the view is in the market right now after the recent correction that has played out within the entire PSU space. Just taking stock of some of the other movers. And we were just highlighting the move in metals. Look at Analco, that's holding up a good 6% right now. You've got a Hindustan Copper up 5.8%. So that's looking pretty okay. And then, of course, Tata Steel as well is holding up by about almost 3% as we speak. But let's also address the laggards today. Bharti, after the recent run-up in the stock, that stock is petered down a little bit, 1.25% lower. Maruti is down a little bit, 0.6% or so. Petronet, Abbott India, Shriram Finance, Axis is not doing a whole lot. It's flat for Unilever, flat for Infosys, flat for ICICI Bank as well. Kunal, once again, the private banking space continues to be jammed. Yes, today there are outliers like an IndusInd or an HDFC Bank, but not a consistent move.
Not a consistent move. So I think today, out of the 350 points, HDFC Bank is contributing the highest, and the stock is just marginally up. I think 1%, barely. So as compared to a point where the indices were almost 1 to 1.5% up. Bank Nifty at one point was I think more than 500 points up. So I think that aspect, it's an underperforming kind of a move from the private sector banking names. Maybe I think it's more like a repetition what we'd seen in the second half of 2023 or the first couple of months of 2024, where the private sector banks were underperforming and the markets were into a risk-on phase. So I think it all depends now on how the next maybe couple of weeks gel up in terms of the market sentiment. If the risk-on sentiment comes back again, and what we're seeing today in terms of recovery, if for the PSUs and the mid-cap names, if that extends for say another couple of trading sessions more, then I believe that the underperformance of Bank Nifty may actually come back. So, and the private sector banks may tend to underperform relatively. So, they may move up higher from current levels, but as compared to many of the other peers in different sectors, I think these stocks may tend to underperform.
Okay, I'm just looking at one of these stocks that is popping on the screen right now, Naresh, and that is eMudra. In the last couple of days or last 5 days, when you look at it, we've seen almost a 20-30% return coming in for this one. What are the charts actually panning out for this one? This has been consistently gaining when I'm looking at it 6-month wise also. Could you read the charts for us?
So eMudra has been a stock which has been outperforming for the last 2 months in a market where small cap corrected. The stock did not correct. The previous high for the stock was 500, 520, broke about those levels, went to 600, 620 levels, consolidated there for the last 1 month, and finally has broken out. So ideally, in this case, the next target price could be closer to 700, 750, and one could have a trailing stop loss below 640 now. So the trend is positive and clear relative strength compared to the small cap index. So for now, it's a hold. Given that it's already moved up 20-25% from the last breakout point, it's a stock where risk reward does not fit for a fresh buy.
Okay, that's the stock eMudra currently in trade, and the volumes as well are not really bad at all. Almost 4 million shares traded at that. But lots of other stocks buzzing. Siddharth, we'll let you go on that note. Thanks as always for taking the time out and joining in. But let me get in some trading strategies as well going, some closing ideas. Kunal, what's on your list?
So I'll go with the ban SRF at current levels. I believe that the stock is heading towards a very big breakout for itself. It's almost like a 52-week breakout for SRF compared to the previous attempts where the stock failed. And so this time around, the volume patterns are also very intriguing. So that's a stock which I would look to buy at current levels.
Okay, SRF, and that's a buy call coming in from Kunal. Naresh, what about your stock ideas?
So that would be a buy on Oberoi Realty, which has seen a good follow-up even today. Breaking out of a 2-month range, crossed 1400 levels. The previous gap down of 1500 could be tested in the short term.
Okay. On that note, let's just slip into a very short break. Don't go anywhere. We'll be back with more after the break.
If you like this video, then like, share and subscribe to ET Now.
Back with closing trades right here in ET Now, and the closing trades are looking quite okay. We are holding on to our morning gains. 22,000 for now, of course, is staying put. News out on TCS that they've signed a 7-year deal. We will get you more details on that. But let me take it across to Ansh, find out what are some of the volume buzzers as well in trade. Ansh?
Right. So firstly, CG Power will be in focus as a stock has given a breakout from its inverted head and shoulder chart pattern, touching record high level as well. It has also registered biggest single weekly gain in over a year. Apart from this, Engineers India will be in focus as the stock has snapped 4-session losing streak, registering its biggest single session gain in over 10 months with volume of over 3 times its 20-session average volume, and it has also surpassed about 100 DMA. Lastly, Hitachi Energy will be in focus as the stock has given a breakout from its reverse head and shoulder chart pattern, touching record high level, and it has been advancing for 6th consecutive month, advancing by more than 70% in last 6 months.
Okay, Ansha, thank you so much for that, keeping an eye out on that one. But, let's also carry forward the conversation now. We do have Kunj Bansal joining in with us as well. Kunj, very good afternoon. Thank you so much for joining in with us. And Kunj, let's start with just talking and getting a sense in terms of what you're making of the market move today. Outperformance coming in from the broader markets again.
Yeah, obviously after the correction that we saw in the short term over the last few days, if we calculate in number terms in large cap, I don't think the correction was any significant in percentage terms. It was hardly 3-4% from the peak of Nifty 22,500 odd. But yes, a large and mid cap is where we had seen significant correction in index terms and more so in individual stock terms, which obviously was in line with the kind of disproportionate return also or the outperformance that small and mid caps had given over the last quite a long number of months. So I guess it was more of a short-term kind of thing. The market has to keep giving the sense of the fact that equity is not a one-way straight asset class. It's not a fixed income kind of asset class which will keep giving you returns at all the periods of time. There are risks involved. And market has to keep giving some corrections also for the fresh set of money which is waiting on the sidelines to come in. Of course, the valuation becomes an issue. If market keeps rising one way, then we have the valuation. So for us in India, the question of valuation anyway remains a challenge. We all keep talking that the Indian markets are always expensive. So the largest growing economy in the world obviously is expected to be expensive. One can't imagine the highest growth rate economy being available at a cheaper valuation. But within that, these kind of corrections are something that is necessary to keep giving those intermittent correction of valuation. The problem that happens, especially for retail investors, is that he tends to shy away even with these corrections and builds in a mindset that maybe there'll be more correction. That is something that is always difficult to predict, given the way the macro economy of the country has been remaining strengthened, and with inflation coming under control, with fuel price having come down, unless all things remain in place, we could see CPI coming down further. So one has to keep that confidence and take a call.
Couldn't just wanted to understand whether in the recent correction you've been a buyer at all within small and mid cap specifically. I know you can't talk stocks, but any pockets after the recent ease off which are looking interesting and sort of coming back to the value zone?
Yeah, so to start with, as I said, obviously these corrections are the time points that give you the relative valuation correction, and as a result, relative safety to invest in terms of the combination of fundamentals and valuation. And then one has to take a call. If one is not comfortable taking a full call, one has to take a part investment call. Moving on, if I look at the numbers that are there for the previous few quarters and based on the order books that the managements have talked, and the valuation correction taken together, and juxtapose it with the fact of the overall Indian economy doing well and which areas doing well. Capital goods as a space is the one which looks like will continue to do well, given the way the order books are there, given the way the execution has been happening, and given the way selectively raw material price correction has been supportive in terms of margin improvement. So that is an area that seems to be giving investment opportunities. Extending that, auto and auto ancillary, there the demand finally seems to be picking up. In fact, demand has gone down to show a strength in the two-wheelers also. Earlier, it was getting restricted to the higher end of the vehicles, which is passenger vehicles. But now we are seeing good demand in two-wheelers also. Of course, stocks have moved up sharply in that period, but wherever there is a correction. So these are some pockets which one can look at.
Okay. We'll keep an eye out on that and those pockets there. But it's that time of the year when most of us will be rushing to file our taxes, and as 31st March deadline approaches. Now, so Snehi is joining in with us, and already reckoners there for you all in terms of the last minute tips that you can do in terms of how you should be actually saving some money. What is it that you should be looking at? Snehi, take it away.
Well, yes, 31st March is just around the corner, and if you've still not paid your tax and you're looking for some ways to save your tax, we've got your back. Now, remember to make use of some of the ATC section deductions. Now, ATC investments are the most common way in which you can get some tax deductions and save your money. Now, the maximum limit under this section ATC is 1.5 lakh rupees per annum, and let's talk about some instruments that will help you make use of this ATC deduction. Let's start by talking about PPF. PPF is a public provident fund. It's a fixed income security provided by the government. Remember, deposits that you make to the PPF are exempted from tax. This will reduce your tax liability, and the interest that you also earn from PPF is tax exempt. Now, the catch is that the maximum amount you can invest in a year is 1.5 lakh rupees, and the lock-in period is 15 years. Moving on, the second instrument is ELSS, or Equity Linked Savings Scheme, and these are equity funds that invest a major of their corpus into equity or equity-related instruments. It allows an individual or an HUF a deduction of total income of 1.5 lakh rupees, and this reduces the tax burden, and it comes with a mandatory lock-in period of 3 years. Moving on, another hack that we have for you is you can pay off your health insurance premium. The premium amount paid for health insurance is tax deductible under Section 80D of the Income Tax Act. This section will allow you to claim deductions of up to 1 lakh rupees for your premiums that you pay towards your health insurance for yourself, for your spouse, for your children, parents, or any other family member. The fourth hack over here is you should pay off your home loan. Now, if you've taken a home loan and if you're paying an EMI on this home loan, remember this EMI is also tax exempt. Under Section 80C, the tax burden can be reduced by paying off the principal amount of your home loan to the extent of 1.5 lakh rupees per year, and various other acts like ATEE and ATEEA will also allow you various exemptions when it comes to the interest that you also pay on this EMI. Lastly, let's talk about tax loss harvesting, because well, markets have been topsy-turvy, and in this recent correction, if you've incurred losses but you haven't booked your losses, you can book your losses and set it off against your gains that you have made previously. Also remember, long-term capital gains up to 1 lakh rupees are exempt under Section 112 of the Income Tax Act. So well, here are some quick hacks that you can still make use of before filing your income tax return on the 31st of March.
Okay, thank you so much for that, Snehi. We'll keep an eye out on those tips, just a few days away. Let's keep an eye out on that. Some way to save your money, save your taxes, let's do that. But Nifty, as of now, 22,000, managing to hold on to that level as well. Kunal, I'm going to come to you and talk to you about a couple of names that we should highlight. POLCAP. What's the thought on charts for POLCAP? How should we be looking at it? Today, it's buzzing away in trade. Last few days also, we've seen that up move coming in. Is there anything indicating on the charts for an up move furthermore?
So, that big sell-off day which had happened for POLCAP when the stock was down, I think 20% or 2 or 3 times, and the stock was down 15 to 20% odd. It had fallen down from 5,600, 700 levels to a point where the stock was almost at 37, 3,800. So, I think 50% of that retracement has now gotten completed for POLCAP, and that big gap which was denting the stock price in terms of the near-term trends, I think that is now completed completely filled. So I believe that this move which you're seeing today is not just a breakout of sorts for POLCAP, but this could probably be a potential restart to the trend for the stock. The stock has also managed to take good support at the 200-day moving average. So net, I would believe 4,500 should be a good stop loss for the trade, and on the upside we should be looking at 5,500 plus as a potential target.
Not just POLCAP, but the entire gamut of these wire and cable stocks did see a big cool off once there was, those reports coming in on some raids happening. RR Cable was the other one as well. In the meantime, let's just take stock of what else is settling in for the day. Maruti, HDFC Life, Axis Bank, Infosys. ONGC, though, has also flattened out, as is the case with ICICI Bank. You've got a very tempered move from TCS, from a Dr. Reddy's, M&M as well. It's less than 0.5% higher as we speak right now. The Adani names are okay. Reliance as well, a sub 1% kind of move. Similar is the case with the Tata Consumer, with the Titan, Hero MotoCorp, Sun Pharma, or for that matter, Eicher Motors as well. Kunj, you did highlight the auto ancillary space, but what about the pure play auto majors? Because there the bull party continues unabated, be it in M&M, be it at Tata Motors or Maruti, which, as later as yesterday, managed to hit that 12K mark.
Yeah. So again, we have to look at start by looking at the holistic picture and then going down. So as we were discussing that on a macro basis, the Indian economy seems to be doing well, and within that, more specifically on the auto and auto ancillary, the auto, we have seen the numbers continuing to remain positive. Of course, a mixed trend. So you have tractors which have not been showing good growth. You have CVs which have shown some slowdown after remaining good. Passenger vehicles is something that continues to do well, and two-wheelers, which earlier was not doing well, has been doing well for the last few months. Now, in anticipation of this good performance, as well as in line with the market, which had anyway been going up till hardly about 15 days ago, all sectors which were either non-participative earlier or which had been giving good numbers or expected to good numbers moved up, and within that, auto also moved up. So yes, while auto ancillaries is something that will be positive for the multiple reasons of export and domestic mix, of ICE and EV mix. The auto OEMs also will obviously be the beneficiary of the overall demand pickup that has happened, assuming that it sustains.
Okay. Naresh, I want to just talk about Zomato. There is no stopping this one, no matter how much of an up move that we've seen in the last 1 year. It still continues to see an up move, maybe 1-2 days of subduedness, and then again you see the run up coming in. Any specific indication that one should watch out for Zomato? Look at it, just 52 weeks, 222%. From 50 to 170 levels is what it's managed to touch as well. So what's the view on this in terms of technicals?
So technically, this is the only stock after 2 years of IPO and then falling down almost 50-60% to recover back above the IPO prices and the highs made around that time. So 160-65 was the high. It went above those levels a few weeks back, then corrected back to 145, and now is again testing that 170 mark. So clearly there is a lot of relative strength. And at current levels, the problem is the stock has already gone up 3x over the last 1 year. So the risk reward is not great, but if somebody has a pure momentum view, one could still look at it as a buy with 160 as a stop loss. Because clear relative strength, one of the few names which is actually above the highs of 2021. So out here, momentum is strong, and all through this move from 50 to 170, the stock did not correct much. So clearly a lot of strength, and the corrections also have not been very large.
Kun, just wanted to get your sense in on the entire urban recovery, right? Zomato also technically being one such play. Wanted to understand whether should one stick to the urban consumption theme, the entire premiumization theme, or should one now look at maybe the rural plays which have a higher chance of a comeback perhaps? Whenever it happens, it's going to be a bigger alpha in that sense.
So is that question to me?
Yes, Kunj, to you.
Yeah, sure. So obviously any sane investment approach and advice will be that you look at the optimum combination of fundamentals and valuation. And within that, if we look at that, the consumer as a space, and as you rightly referred, has been continuing to face slowdown for quite a number of quarters. And when I say consumer, it extends right from fast-moving consumer goods to consumer durables to electronic equipment manufacturers, household appliances, and things like that. And because of the demand slowdown, which obviously has reflected in their numbers remaining subdued on the top line and bottom line growth. In fact, in some places, they have got benefited because of the raw material price correction. Now, in any growing economy, ultimately the demand has to come back, and this urban-rural gap demand has to kind of merge. So the rural demand will pick up now. Possibly, will it be after the crop comes in, or because of the election and other things, the government sending money into the hands of the people comes in, or whatever be the other factors, and that's where we will see the demand coming in. So these sectors, given the way their valuations have become attractive because of the non-performance of the overall sectors as a whole, obviously become a good investment case for a medium to long-term investor, as I said, from the point of view of optimum combination of fundamentals and valuation, which is what a medium and long-term investor has to look at. A short-term trader will continue to look at the trading pattern, the stop losses and things like that. But yes.
Okay, and since we're talking about the entire Indian consumption theme, we had Vinay Dubey from Akasa in the studios earlier today, and he says that Akasa is on track to be one of the top 30 airlines by 2030 and also list before that. That's the word from none other than the founder and CEO. Let's hear out a slice of that interaction.
We don't plan for market share.
Okay.
I mean, and you can, have that as a headline. If we plan for customer service, we plan for employee centricity, we plan for our cost structure. We've got 226 aircraft on order, and here's another first. If you look at the 120-year history of global aviation, there's not one airline in any part of the world that have placed an order of 226, well, not even close, not even 200 aircraft, not even 175 aircraft within 19 or 20 months. So growth in market share is something that we'll get over a period of time without having to focus on it, right? And so we're focused on financial stability, we're focused on service excellence, we're focused on employee centricity, we're focused on reliability. These are the things we're focused on. I don't even look at that market share statistic because we know that by 2030, and here's a bold statement that I'll make, but we know by 2030, Akasa will be one of the top 30 airlines in the world by size. Part of the reason in India there are no issues is because some of the variants that are flying in India are very different from the variants that have reportedly had issues on the Boeing side. So I want to make that extremely clear. I want to make that clear that our aircraft and the rest of Boeing aircraft continue to get certificates of airworthiness from the regulators, not just in India, but the regulators in the US as well. So I want to be very unequivocal in the fact that these are extremely safe aircraft to fly on. And so no, we're not looking at any changes as far as the aircraft that we're flying today here in India. Formally distributed, sure. But we'll say these 202 remaining aircraft will be delivered by 2032.
Okay.
Yeah, and it goes a little up and down. In the initial years, it'll be a little less. It's easier for us to absorb 30 aircraft on a base of 150 than it is to absorb 30 aircraft on a base of 40 or 50. So clearly the growth rate in terms of number of aircraft will be, will increase over time, even if the percentages decrease, but the number of aircraft deliveries by year will increase over time.
Okay, that is obviously about Akasa Air. We did have Vinay Dubey joining in with us this morning. But, let's shift focus and talk about the cement pack. Look at Ambuja Cement, ACC Cement. All of them are in focus today. Kunj, I want to come to you and understand that, what is it that you are reading in terms of the cement names? Okay. So, Kunal, I'm going to come to you actually, and let's understand in terms of the charts whether you see something like an ACC, Ambuja, Dalmia Bharat. What should one actually look at over there? Anything attractive that one should watch out for in the cement pack?
So from the larger cap names, I think UltraTech Cement is attractive. When you look at this comparatively with ACC, Ambuja, UltraTech Cement was one of the first ones to try and come back to that 10,000 plus mark. And then in the last leg of the last one to 2 months or so, the stock has recovered or corrected almost 10%. So from I think 10,400, 500 levels, 96, 9,400 is where the stock had tested towards, and now it's come back to that 9,600 mark. So in terms of risk reward, the positioning for the stock with respect to the other peers, the fact that the stock was one of the leaders in terms of the initial breakout levels, I think all of that augurs very well for UltraTech Cement. So I'll probably try and pick that.
Okay, UltraTech Cement, that's coming in and was as one of the top ideas. Another buzzer in trade today, and let's bring up the BSE chart. That's the Bombay Stock Exchange. You've just got an upgrade coming in today from the House of Investec. They've upgraded the stock to a buy and put a target price of 2,800 per share on this particular stock, which also means an implied upside of a good 25% even from the current levels on the stock, anticipating further market share gains with the traction in the Bankex in particular. That's BSE in trade for you. Kunj, do you believe that with the equity... Okay. Naresh, let me come to you. Stack up a chart for some of the AMC stocks for us, BSE as well as Angel One all added in together, and what's looking like the meatiest of them all?
So BSE has been a clear outperformer. It went through a sideways phase for the last 4 or 5 months. It's corrected from 2600 to 2000 odd levels. The good point is the stock made a similar bottom back in December end also. So it has held down above those levels. So eventually this is an indication that the stock looks pretty interesting. And this whole financial basket, whether it is AMC's broking stocks, they've had a decent enough 20-25% correction. And now some of them look very interesting. So Angel One from 3900 has come down to 2600. The last breakout point for the stock was 2000 rupees, which is what the high was for the stock in 2022. So Angel One at current levels also looks promising given the correction. ICICI Securities is a special situation case wherein if the delisting fails, the stock could do well. So overall, as a basket, a lot of these names look interesting. The AMC basket as such, we had a very strong move and could consolidate. So HDFC, AMC, Nippon Life could consolidate. But I would be more interested in the broking names than BSE itself.
The broking names, not the BSE, that's the top call coming in from Naresh right now. Let's just take stock of some of the other buzzers as well in trade, and just want to highlight what some of the other stocks are up to. Let's just bring up HDFC Bank. That as well, like we told you, that's sort of settling in at a 1% odd gain kind of mark. BSE, we just flagged off. That's looking very smart. Earlier today, of course, you had an upgrade coming in on Bajaj Finance. You had an upgrade coming in on Avenue Supermarts as well. So let's just check in on what these names are up to. Bajaj Finance has also had a very sedate sort of day today. 1% at the max is the kind of gain that it had. The other one, of course, is Avenue Supermarts. That's seen a bigger move today of about almost 2.5% coming in. Kunal, let's just reiterate for the viewers who didn't tune in the morning, because you've been tracking the charts of Avenue Supermarts since when? What, 3,400, 3,500 thereabouts?
Absolutely, yes, Aisha. And I think it still looks very attractive. In fact, today the stock has given a fresh 52-week breakout, and this is coming after a huge amount of consolidation, because the stock post listing, which was around 600 levels, moved up to 5,500, 600 mark in 2021 mid, and from there till the last 2.5 odd years, the stock was into a downward consolidation. So this seems to be now a very strong indicative of a fresh trend emerging for Avenue Supermarts, and I would believe that this potentially should take the stock back towards 5,000, 5,400 plus mark, at least over the near term.
Okay, that's the case coming in on Avenue Supermarts. There was a big upgrade on Cummins as well earlier today, and that was from HSBC, upgraded to a buy from the earlier neutral rating, and the target price also up to 3,300 from the previous 2,600. But let me just quickly get in some BTST trades before we wind down for the day. Naresh, what's on your list?
So first is the Warren Oberoi Realty, a breakout trade here. Stop loss at 1390, target price of 1450. Second is the Bhavan Tata Steel showing the latest strength and momentum. Stop loss at 148, target price of 155.
Kunal, what about your BTST ideas?
So I'll go with Jindal Steel as the first stock. Very interesting chart on the short-term basis, a swing breakout on the hourly charts, as well as a breakout above that 800 levels. Futsal is to buy with a target of 880. Stop loss remains at 770. And second would be Aban Power Grid. This could be a very strong V-shaped recovery for the stock, very rarely seen for the stock. But I believe that the stock is showing all of those classical signs of a breakout. I would suggest to buy with 285 as a target. Stop loss at 265.
Okay, let's wind up for the day, and let me hand it over to Vinny for the closing trades. Vinny?
So absolutely not ending on a bad note today when you look at it for the Nifty. 22,000 is what it's managing to hold on to, 0.8%, 0.9% of gain off the day, slightly off the day's highest point. Let's look at what the Nifty Bank also did. Nifty Bank also saw good gains as well. Nifty Bank holding on to 0.8% in gain. And we saw all these private banks, PSU banks, all of them buzzing away in trade. HDFC Bank also, in terms of a contributor to the Nifty, also saw good gains. Nifty Midcap and Small Cap, the broader markets, that's where we saw most of the action happening today. Look at the buzz that is coming away, closing at the day's highest point. For the Nifty Midcap up to 2.5%, Small Cap 2 up 2.5% in trade as well. Advance decline ratio clearly today is in the favor of advances versus decline. When you look at it in terms of what Nifty Realty did, that was the top sectoral gainer today. So pull up the charts of Godrej Properties, DLF, Prestige Estates, all of them, Brigade Enterprises, all of them buzzing away in trade. DLF also closing at almost the day's highest point. Similarly for Godrej Properties as well, strong gains that we are seeing. PSU as a pack today, we have seen a buzz coming in around for PSUs. So whether you look at PSU banks or overall even other PSU names like even the defense names, they all are doing well. Steel, Tata Steel, SAIL, NALCO, Hindalco, all these names also buzzing away in trade in terms of the metal pack as well. So yes, metals as a pack overall also saw a nice buzz over there. Let's pull up some of these other charts as well that one could watch out for today. In trade would be Zomato. That's seeing strong gains. Nykaa, so the new age tech companies also saw a very good traction coming in. Muthoot, surprisingly a smaller company, a mid-small cap name, but surely saw a very strong move today as well on the back of that. The recent listing, today's listing we talk about, Crystal, that's a muted listing that came in, closing the first day on a muted note as well. Nothing exciting that could be happening in Crystal as well. So yes, that's how as of now we're seeing in terms of the markets. Let's look at some of these other movers that we saw in the small cap side. So yes, gains came in from BSE, IRB as well as Intellect Design and Incorpor as well, which saw a buzz as well. So yes, keeping an eye out on all of these stocks today, but ending on a good note at least.
If you like this video, then like, share and subscribe to ET Now.